Hey traders. Okay, so picking up on StockTwit's rankings as far as I think this is like most active. So BKKT is one. GME, of course, they just reported earnings. Um, DWAC, however you want to pronounce it. Roku Path. All right, so let's hit a few of these. I've never looked at BKKT, so let's go there first. If you, first of all, if you like this video, hit it. And if you like the channel, subscribe to it. I'm not going to judge the company. I don't know enough about it. I will try to tell you what I see on the charts. So I did look, just loaded the website to see what it's all about. It's got all the buzzwords. Look at them. Crypto and empowering companies to connect and do rewards and all of that. And of course, it has the retail side. So all the buzzwords are there. For me, it's eventually they're going to have to show me the money. That's the big deal. And so far, there's no need to look into their financials because it's a new prospect. Therefore, I should only focus on the chart price action because great or not great, that's what matters to my pocket. Can it make me money or not? Disclosures, I don't have any positions on it. I literally have never looked at the chart before that I remember. Maybe I have, maybe I haven't. Actually, let's see if I just lied. Do I have any drawings? I have looked at it. What? I don't even remember. Okay, there you go. Liar, Nick. Liar. So, by the way, open to comments. Just keep it clean. We'll debate it. Okay, this is a resistance line that's still correct. That was a ledge up here. So this rally was like 500%, maybe just under. Depends where you started. It was this burst. That's a pretty interesting candle. So pay attention to the edges of that candle. This and that. That orange line I didn't draw. This is the line that is most interesting to the market for this period of time. It is the place where there was most transactions. So the volume bars down here, they are represented up here at what price level. That's pretty important information. When they say price is truth, that's what that means. Price is truth. That's not my opinion. That's data. That's where the transactions happen the most. Second most, down here. So in between, there's a vacuum. That's why you can't hold a lot of here. So it went from this is now resistance. This is trying to be resistance. It didn't hold as support. It did for a little bit and then fell below it. That was disappointment. So it's important for the bulls to get back above, not 20, above 18 comfortably and close and make it to be like footing. Meanwhile, they're fighting over it. So that was an important battle here for some reason at the time, and then they lost it. So I'm going to move, this box is no longer needed. Let's talk levels instead. So if I copy paste, where do I place it? Anybody guess? So there's going to be definite resistance here, and I'll explain in a second. Actually, I don't have to, but I will. So this is an important failing point. So prior fails will be future problems until they take him out. So they are the next problem, but they're also the opportunity. And if you look left, it was a base. So that was a battle for this is daily, 2 hours. So each one of these is 2 hours. Man, that is an active 2-hour candle. Whew, I wish I was watching it that time. So anyway, so they fought over it and then based this whole rally on it. And that was the place where they tried to hold, they tried to recover, and they haven't. So next time they get here, it's going to be a slog. So if you're a bull, you want them to get there, however, expect them to fail one time, come back, and break out. There'll be some sort of an inverse head and shoulders, not quite, but it will be just the neckline that got taken out, and then the bulls will bum rush the bears and get to this problem area over here. This problem area is from volume. It's not only a ledge, physical ledge up here, but it's also a cluster of congestion. There's a lot of action here. When it gets there, those who traded it before will be active again. Again, not my opinion, fact from prior history. So what cannot happen is it cannot come back and make a lower low. Bottoms should be a process, not V's. So maybe this is the start of the process. Let me see, do I have a scratch pad? Let's bring a scratch pad. It'll be nice and dandy if they all do that, but it's not constructive. So you've got the bears in control, descending channel. So you're saying, hey, they broke out. Maybe. That's the start of the process. Step one, stop making new lows. They did. They tried before, but then failed. So this one looks promising. Step two, start making constructive moves up. That's not a trend line. I'm just saying be constructive about it. So you can, making lower highs is still fine. So you can come to blows with every level there is that try to hold on the way down. It becomes resistance on the way up. So you're going to have to tackle them one at a time. For example, this is a failing point, and the progress brought price to it. So if they fail one time, that's totally normal. Keep the progress going, get above it, and then tackle the next line. So this was the next line. All right. Keep the progress going. You hit it, you come back here, and then you break above it to tackle the next line. So stop making new lows, start building progress, tackle one line at a time. And how do I pick the lines? Look left. Wherever they've had a sharp fail, that would be one. So this one should have stalled them, and look where they're at. They went above it, but this is a 2-hour candle. They closed at inside that wick, but then they have this junk to deal with, and once they clear that, they have this junk. So it's not going to be easy, but they're doing it right. Progress, tackle one line at a time. Stall a little bit, fine. Don't lose the progress. What you don't want to happen, come back down to the base camp. Why? There's no need. And if it does happen, then one of these will happen. If you come back, like here, like are we here? And are we here? Like they came back to base camp, fiddled around, dicked around enough to lost footing. And maybe this is not through fault of their own. Maybe the market caused them to do that. It doesn't matter why. There's no need to come back to base camp if you're really intent on breaking through it. That's the technical aspect of this one. What was another one we wanted to do? Let's see. Let's pick another one. GME, do we need to? I mean, they just reported. All right, let's go there. This is a hot stock debate. All right, so this is where they're at after hours. So it looks like they are dropping 4%. I have not read the headline. I don't know what they said. It's good that they're falling just to here. And I don't know the actual low, like they have a flash low and a flash high. You want to look at that. Let me go check, actually. So it's 160. Wow, interesting. I'm glad I checked. So if you don't believe in technical analysis, why did they stop at 160? It's pretty darn close. Okay, so the warning for this is tomorrow. Do not lose 160. Because then there's more downside to come. Technically, I don't want to say how much because it's improbable the size of the drop that could happen, so I won't mention it. It's just important to hold it. And it's almost a prerequisite to come down there during market hours, although this is a flash low, because sometimes the price action off hours needs to be revisited during market hours. It's not a rule, but it's often the case. So if tomorrow it opens and it falls, and you're bullish GME, that's an opportunity to try to scalp a swing and trade up during the day. Don't start buying puts into 160 because that's normal. Okay, so now you have to deal with wicks on top, and they must hold wicks on the bottom. What does that mean? The wicks is just a rejection. They got here at a certain point on a 2-hour level, and then they couldn't close. So you have rejection levels up here. You have rejection levels down here, which is good news. So that's support, that's resistance. Now you're stuck. Ping pong. So how long does this stock stay stuck ping pong? UPST, you remember? We took a trade based on the fact that it was too tight, meaning it's too quiet. And active stocks like this do not stay in a tight range long. So if it starts ping-ponging in here, place your bets. If you're bullish, you place your bets towards the end of the range to swing trade it up to here. Then you don't even need the breakout, but you can keep runners. So I would book it, and if it goes above it, then you have a shot at getting to 190. Conversely, if it loses footing, if you're a bear and it gets up to here, you short it with a tight stop, short it. I don't short stocks. If I did, I would buy a put. I shorted Apple today on a trade because of something I saw. I sold a call spread. So I'm risking $1.50 to make $1, which is pretty good risk reward with a specific thesis. In other words, I'll stop out tomorrow if it doesn't work my way. Same thing here. If it gets up to here and it's ping-ponging inside of a range, I short it here mildly and try to write it down to here, book some of it, if not most of it, and then leave some runners, because if they lose footing, they could do this. How far down? I don't know. I don't want to discuss it because the target is improbable. Therefore, it probably won't happen. If it does, it's going to find support somewhere in the middle. By looking left, you can find that out. I don't know if I need to look left. Okay, so if I go to a weekly chart, messy. Wow, man, this is so crazy. Crazy stock, crazy. Fun though, fun. So this is a good solid base. This is a weekly chart now, a whole week here. 1, 2, 3 weeks, almost a full month of nice base, nice base. So there's no reason why they lose that. Okay, now if they bounce and fail and then they lose that and then the market corrects, technically it should come down to 2 digits. Oh, there comes the cuss words. I'm not calling it down there. I just told you it's an improbable scenario. It exists, but it is improbable. Okay, so that's the trade part of it. These lines and triangles, it's a new tool I'm trying out, and I'll give it a shout out when I start using it properly. I'm still learning. Pretty good tool. Anyway, let me see here. What else was there? I know I caught another DWAC. Do we want DWAC? Let's go do. Oh, Path is getting shellacked. Let's go DWAC. Wow. What? Impressive. Okay, so this is a headline trade, correct? I have looked at it before, and that was the ping pong range that it was going through. And guess what? It's back into it. So they staved the danger, and now they're up at the upper ends of the range. So logically, I shouldn't start longs now because that's where it failed before. There's no logic involved in here. If you love it, just trade it and just be diligent. Whichever bet you take, make sure you stop out and don't average down. Average in, but not down. It's difference. If you don't know the difference, averaging down is taking a foot allotment. If you usually trade 100 shares, you take the whole 100. Averaging into a stock is you take 50 and then you add the second 50. You don't increase the risk size just because you were wrong by entering, or you were unlucky with the timing entry. So not an entry point, in my opinion, until it proves it can tackle at least this level. So if I were to enter an alert, which I will do right now. So that will be my alert. Because if you missed out 28%, what's the big deal about missing out another 2 or 3 or whatever? Anyway, that's DWAC. Path was on there. I think they reported down 2 or 3%. That's not a big deal. I believe I looked at their financials. Pretty good company. Pretty good opportunity. So it's a matter of just having it stabilize. And it trades part of like the ARC type of stocks, like Palantir. Pretty good company and getting shellacked. Anytime under 20 for Palantir is a blind entry point that pays. In this case, UiPath is solid bounce. Now it's going into solid resistance. So if I didn't buy the bounce, it's probably too late to get started for a trade. For an investment, that's a different strategy. But for a trade going into this fail, going into this band, it's probably going to find some sellers. It will probably follow the markets. So if the markets continue rallying, then that will happen. So I'm not bearish. I'm just telling you, know your entry points as to where in the process of that stent you are. So this, again, is not a trend line. It's a behavior. Okay, so the bears are kind of in control, and they want to keep it. The bulls are trying to snap out of it. Step one is just like the first stock we looked at, stop making lower lows. So don't go back to base and then lose the base, because you come down to here and you continue trading inside that trend line. Otherwise, you just stay the course, keep building positive momentum so you can tackle these resistance lines one at a time. That orange line and the one above it, that's a lot of supply here. So this is going to be our resistance. I'll zoom out and I'll show you. So you want to snap out of this descending channel. So this orange line, it's these 2 points. Look how much more volume there is on these 2 points than all the other points around it. So once you get there, it's going to be like stepping in mud. As if you're on a bicycle and you're pedaling on pavement and then you hit a mud spot. It's like, you're going to slow down. Same thing. Doesn't mean you short it. Just means know your entry point. Enter average in. Okay, let's see if I don't want to do another one. I don't know what that is, PPSI. Roku went long on the dip. Didn't time the actual perfect entry, but the spirit of it, and I've indicated by the price action today, up nicely into resistance right away. The machines will start selling it here. The levels are right here. But this is a crazy stock where sometimes it just doesn't pay attention to resistance and it goes to the moon. This sell-off was ridiculous. Unwarranted. The report was amazing. The growth was still there. Whatever the quote estimates were, they were smoking crack while setting the estimates if somebody was disappointed. Most growth companies delivered strong quarters. It's just whatever they were expecting. I don't know what the experts were expecting. So that's Wall Street for you. So you can see how it had levels where it lost. Like this one is a significant level, the 300s, the round number and everything. So now it's going to be a problem on the way up. But 280 was also a level where they tried to hang on to and then lost it big time. Here, whatever happened here? What day was that? Anyway, so funny, on the 17th, one day before that, I shared a video about 20 minutes on how to buy protection on stocks. It was buy VIX calls and then VIX exploded, or buy debit put spreads that cost $2 and change, and they turned into $1,000 each per contract. So now they're coming back into that same zone. So the easy bounce has happened. It's not the end of the road, so we may fade a little bit and come back out. If I'm long, I stay long. If I sold the put spread, or if I sold the put and I got assigned, or I'm going to get assigned, I will take the shares and deal with owning shares. Selling covered calls works well. There's tons of things we can do with that. So anyway, that's Roku. It has good fundamentals. It's not like you're betting on a hope. I understand RH is flying high, so no need to look at it. Apple, I told you I shorted a little bit, but I'm not going to say why. I shared my screen live during the day, and I explained exactly why. So we'll go with that. And by me, quote, shorting Apple means I don't need it to drop. I sold the call spread. I just need it not to make a new high above today's level, and I'll be a winner. Okay, 17 minutes. A bit too long, but we covered a whole bunch of stocks. Later.